Key inflation gauge worsens as Americans' income and spending power erodes. Welcome back to the show. Question for you. Do you have difficult financial choices to make every month? Do you have to decide which utility you will forego paying for a month and which bills will get paid? Will you pay for, say, medications or food? Or will you be able to afford both? Have you tried to modify your mortgage only to discover that interest rates are at the highest they have been in over 9 months? If these questions are ones you have had to answer, pay close attention to this report. A key inflation gauge accelerated in April to the highest level in 3 years, squeezing Americans' finances and creating political challenges for President Trump and congressional Republicans, with midterm elections just 5 months away. Inflation jumped to 3.8% in April, compared with a year ago, the Commerce Department said on Thursday. And that is up from 3.5% in March and the highest since May of 2023. On a monthly basis, prices rose 0.4%, down from the 0.7% jump in March, but still higher than the inflation fighters at the Federal Reserve would prefer. Thursday's inflation report also showed that in addition to gasoline, prices for groceries, clothing, and electricity are also on the rise, indicating that inflation may be growing more entrenched. Inflation is notably above the Federal Reserve's target of 2%, which means Fed policymakers may decide to forego any cuts to their key short-term interest rate this year. Some officials have signaled that the central bank's most substantial move under new Fed Chair Kevin Warsh could be a rate hike rather than a cut. Yet, Trump and some of his top officials are showing little concern about higher prices and the impact of the Iran war on Americans' financial health. Consumers have a dim view of the economy and have soured on the Trump administration's economic policies. Thursday's report showed that Americans' after-tax inflation-adjusted incomes fell for the third straight month, while spending, adjusted for inflation, barely rose. Trump has said that price increases for gasoline, for example, are up more than 50% since the U.S. and Israel launched attacks on Iran, and those amount to peanuts. He previously said he does not consider Americans' personal finances even a little bit when mulling his options on the war. And on Wednesday, Treasury Secretary Scott Bessent said higher prices would be transitory, reviving an ill-fated term used by former Fed Chair Jerome Powell to describe the 2021-2022 inflation spike that became a forceful political tailwind for Trump in his campaign for a second presidential term. Excluding the volatile food and energy categories, core inflation rose to 3.3% in April from 3.2% back in March. It is the highest core figure since October 2023. One positive sign in the report: core prices rose just 0.2% in April from March, down from 0.3% the previous month. Dan North, senior economist at Alliance Trade North America, acknowledged the core price increase isn't huge, but he added, it's the wrong way. And we think it will continue in the wrong way because there are so many inflation pressures in the pipeline. Americans' incomes were unchanged in April from March, in part because farm incomes fell after a large government aid package ended last month. Adjusted for inflation, personal income actually slipped 0.1% last month. Spending, that rose 0.5% in April from March, though most of that reflected price increases. When adjusted for inflation, spending rose just 0.1% in April, down from 0.3% the previous month. We'll find out next week about inflation for May. Signs of stress are building inside the American household across the economy. Joe Brusuelas, chief economist at RSM, a tax advisory firm, said, inflation-adjusted spending, disposable income pointing to a slowing in May. Spending as inflation approaches a peak on the back of the historic supply shock. The U.S. economy grew at a modest 1.6% annual pace from January through March, according to a separate report from the Commerce Department on Thursday. The country's gross domestic product, the GDP, the nation's output of goods and services, rebounded from a lackluster 0.5% expansion the last quarter of 2025, when growth was hobbled by the 43-day federal government shutdown. The first quarter growth, which covered the first month of the Iran war, was a downgrade from the 0.2% expansion Commerce initially reported. Resilient consumer spending, mostly by upper-income households, and ongoing investment in artificial intelligence infrastructure are helping propel modest growth. Growth in consumer spending, which accounts for 2/3 of U.S. economic activity, slowed to 1.4% in the first quarter from 1.9% at the end of 2025 and was down from the 1.6% preliminary first quarter estimate. Business investment, likely driven by spending on artificial intelligence, that rose at a 7% pace. What about gas prices? Gas prices averaged about $4.50 a gallon nationwide for 3 weeks this month before finally slipping to $4.43 on Thursday, according to the AAA Motor Club. Gasoline prices averaged $2.98 a gallon the day before the Iran war began, and that was February 27th, 2026. Yet the cost of many other goods and services have picked up in recent months, raising concerns among many Fed officials that inflation is being pushed higher by tariffs and other factors in addition to the war. The cost of services such as dental visits, car repairs, and veterinarian visits have been rising sharply, and clothes, toys, and groceries are also seeing outsized price gains. Rapid investment in artificial intelligence centers also appears to be driving up the cost of computer equipment and software, adding to inflationary pressures. And electricity prices have also spiked from a year ago. As an aside from this information, Treasury Secretary Scott Bessent says that Americans dipping into savings to support themselves could be a good sign, actually. Treasury Secretary Scott Bessent suggested Thursday that economic woes Americans report feeling throughout the country may be overblown, even as new research suggests nearly half of the country has struggled to make ends meet due to rising costs and stagnant wages. Asked whether he was seeing signs that American households are dipping into their savings to pay for the higher costs of things like gas and groceries, and whether that concerned him, Bessent gave a rather odd reply. Academic literature would tell you lower savings rate can mean one of two things: the kind of doomer view you took, or that people have more confidence, he said. Or it could be something else because, for instance, stock market gains or 401k gains might not show up in savings. So they're looking at that and thinking they can draw down their household savings, right? Right? Yet not every household has 401k plans or stocks invested in the stock market. He also expressed optimism about gas prices, which remain significantly higher than before President Donald Trump's Iran war. I believe we've already seen oil prices come down substantially, Bessent said. We are pumping more oil than we've ever seen before. And as I said, these are short-term challenges that we will get over. At another point, he asserted that the oil market is very well supplied. Treasury Secretary Scott Bessent is estimated to be worth around $600 million, according to Forbes. We're going to take a quick break, and when we come back, we'll hear from Lawrence O'Donnell, who has plenty to say about Trump's silly cabinet meeting or show performance. We'll be right back after these messages.